We're just talking about stuff we love to do.
What's up, guys? It's the one and only Antonio's D Capos, hashtag the coolest realtor. Hope everyone's having a healthy, wealthy Wednesday. I know I am. With that being said, today I'm super excited. Before I get into anything, I just wanted to say I didn't get a chance to come on and say Happy Memorial Day to some of those folks, but I just wanted to, go ahead and say that as this is happening, you can tell we're live. My whole computer is like shifting. That's so crazy. That is like so cool.
I was wondering how you're going down.
Yeah, I was like going down. I have this automatic desk that keep rises. It's crazy. But anyway, enough about that. I actually am super excited to have you here, Chris. Chris Urban is with Butler Mortgage, powered by the mortgage firm. I'm going to give you a second. Chris, go ahead and introduce yourself, please.
Yeah, thank you. Yeah, Chris Urban from Butler Mortgage, powered by the mortgage firm. I've been doing mortgages now since, it seems like long, but I guess not, since like 2009, 2010. So I got in there right after the crash. I was out of college, like anybody else at that time period, trying to figure out what we're going to do in the middle of the Great Recession. So I got into mortgages at that point, learned my way, and I've loved it ever since. It became more than just, hey, I need to find a career and a way to make money. It was all of a sudden the passion to help people, get people into homes. That became a real thing for me, and I felt on since then. So that's been my drive throughout this whole process.
That's awesome. I think that's awesome leeway into what I was going to mention, Chris. They usually there's this question that one of my mentors asked me. He's like, what is your why? What is your reasoning? Obviously, the cliche thing is to say money, family, right? And not that doesn't hold value, but those are some of the more more common things that people say. But in reality, the why for me, which it seems like is the why for you, your passion to see success in others, or your passion to see others reach landmarks that are maybe not far-fetched, but harder obstacles to obtain, having to build credit and those kind of things. So I think we got into business for the right thing. And that's why I'm super excited to partner with you, Chris. And hopefully people will understand the value that we bring and how we can help them fulfill their dreams of real estate. But yeah, I wanted to kind of pick your brain, Chris. This was an opportunity for me. I never really got a chance to bring a lender in, and I don't want to classify you as a lender. What would you say your title is? Because when I say lender, they're like, oh, he got the money.
Yeah, so there's a technical one. They call us a mortgage loan originator, right? That's what our technical position is. But the reality of it is we, and everybody might or call themselves a little differently, but I look at it as like, okay, yes, my main job is to help them do a mortgage for somebody, right? That way they can buy a house. But there's so much more on the line for us, right? We're literally taking people's lives and turning it upside down, dumping all their financial information in front of us, right? And so they're trusting with us with their livelihoods, and so there's a lot more to the official title for us, but that's the gist of what that title is in its basic form. But I take it much more serious than that.
Awesome. Thank you for the breakdown of that. So there you have it. Loan originator, is that safe to say it for short terms for everyone's knowledge?
Yeah, it's very safe. You could just say loan originators, like you could cover a bunch of financing, but they put the mortgage in front of it since we focus on mortgages. But yes, loan originator is perfect.
Okay, cool. So for everyone, he's our loan originator and ultimately the source in which would help us get funding for mortgage approval. Does that sound right?
Yes, that's absolutely right.
Awesome. Absolutely. And I'm going to let him elaborate a little bit more on that, but I haven't had that opportunity to give someone an inside depth. They always get the information from me. And even as a realtor, we don't have all the answers sometimes. Sometimes we have to reach out to our partners and identify some of the information that they're looking for, or they're wanting to know about. How do I get qualified for a loan? What do I need to do? What are the requirements that I have to have? And obviously we know the basics, but coming from the source, what are some of the requirements, or what are some of the preparations for people to begin to collect before we even talk about some of the types of loans that are out there?
Yeah, that's a great question. And that's especially your first-time home buyers, which we love working with. I know you love working with them too. They're almost like, okay, hey, because you put home buying on a pedestal, right? Because it's a massive achievement in life. It really is. But we're here to guide them, you and I. So the first thing we're always going to go over is, I like to actually go over a list of things that when I'm talking to somebody, and I'll start asking them about, hey, one, how's your credit looking? We'll talk about credit. the big popper thing today is Credit Karma. There's Credit Wise. A lot of people are now getting their credit directly from Experian, TransUnion, Equifax. So people today, amazing. I love it. They're more in the know of their credit than I've ever seen in the last,
like proactive, right?
very proactive,
Okay.
very proactive. I
Good.
love it. So we're going to talk about credits, right? So it's a good idea to know where that's at. If you don't have one of those tools, go ahead and get something. And if you want, we can talk a little more about which tools I think are better for people. We can go into that later. The next one is I'm going to ask you about your income, whether it's you're self-employed or do you work for another company. Are you on some kind of retirement income? Whatever it is, there's multiple layers and things or ways to earn income, and most of it we can use in some way or shape or form, right? And so we'll go over all that. You're gonna want to if you let's say you work for a company, you're gonna want to go ahead and get your most recent pay stubs. Know what your pay rate is. Some people, we get so busy. We know that, hey, I got a raise a year ago, and we don't really know what we're getting paid.
Yep.
For me, that's important to know. So if you're hourly, know your hourly rate. If you're salary, know your salary rate. Things like that. So that's important to know.
Okay.
You're better off going ahead and just get your pay stubs in front of you, and that way, when I ask that question, you can kind of have an idea of where you're at there.
You know it. Okay, makes sense.
And then the next big item is your assets. And when I say assets, I'm talking what's in your checking, what's in your savings. Do you have a money market account, stocks, bonds, retirement accounts? A lot of people don't know you can utilize your retirement accounts in certain ways to pay or buy a house. So know where your money's going to come from, know how much money you have, and that way I have a better idea of which loan program fits you best. And so we'll take all three of those points, and then we'll start at least in my head, I'm starting to brainstorm. Okay, which program I think is best. I'll give you your options if the options are available to you, and we'll go over it. But those are the three things you're going to want to have a really good handle on up front. That way, when we talk, we'll pretty much be able to know pretty quick early on, anyways, where you're at. And then, of course, we'll go into more detail once I have documentation in front of me.
That makes sense. Hey, Chris, I have a question for you.
Yeah.
And this is maybe funny, and you probably deal with it more common than not. Why is it important for people not to lie to you? Like, I feel like people are like, I had one guy who lied about an account that he had in another country. And I'm like, dude, it's so important to tell your loan person or your agent all the accurate information. So you're not going to do nothing with it, right? You're not going to like report them somewhere. It's just for more or less like you're okay. Can you elaborate on that?
I was like, somebody was like, listen, we're not, IRS police. We're not, that's not our job. We're here just to gather information and make sure you can qualify to buy a house. If you don't tell me something, more than likely, we're going to find out about it, right? Lenders pay a lot of money for public record reports. We pull in a lot of information. It's very hard for us to miss anything. And it's like that for a reason, because we don't want to go back to what happened in 2007 and 2008, right? We've done everything we can, including the federal government and their laws and guidelines, to avoid something like that. So not telling me everything or withholding certain information is more than likely going to get caught. And then here's the thing. When I pre-approve you based on information that you provided to me in documentation and whatnot, and what you told me and what I was able to find up front, you go out and you find a house, you're going to order an appraisal and likely home inspections, right? That's about $800 to $1,000 of stuff just right there. And if top of that, you more than likely have an earnest money deposit or what we call like a good faith deposit on a contract, $1,000 at minimal usually there. All right, so you might be $2,000 in the hole in this whole transaction. And if I find something later on, not only did you lose time, but you're going to lose money.
Absolutely.
We don't want that to happen to you. You're always better off just telling me everything, because more than likely it's not as bad as it really is. And if I just knew about it, I can get a way around it or find a way to take care of whatever it is. So just tell me up front. The earlier I know about it, the better.
That's a great answer. Thank you for going so in depth with it too, because sometimes they're like, should I have told Chris about this? Yes. Yes, you should have told Chris about the account you have in Puerto Rico. Yes. So yeah, thank you for elaborating on that. And I feel like that's kind of like a common misconception with people. They feel like they're going to do more justice by lying. No, we're unbiased and we're all on the same team. So what we need people to understand is your agent, your lender, the buyer is all on the same team. So we have to be truthful with each other to make sure that we can get through those obstacles early. Like extension. So I think that's a great leeway into the next topic that I would like to talk about, if it's okay. And I'm going to pick your brain, Chris. So I appreciate you, man.
Oh, please do.
And
Please
it
do.
sounds like you're ready to go. So I love it. But I was scrolling through Facebook, and obviously you always put out some great content on behalf of your firm. I wanted to know about this program, and I got a lot of people hitting me up. They're like, Antonio's, why is the credit score got to be so high? So when you dropped the program, I believe that had a 600 FICO score, very minimal. I didn't elaborate on anything, because I was like, I'm gonna bring Chris in here and let him explain it. So if you don't mind, just shedding some light, because in my opinion, that's one of the more lenient FICO scores that I've seen. So maybe you can give us some in-depth requirements on getting into that particular program. What are the qualifications? Because I do have a lot of people that are under 620 that are asking about it.
Yeah, no, that's a great question, and that was my whole point of keeping it that way. It was designed to say, hey, listen, this is available now, and then just reach out to me, because every single person and their circumstances are different, and so we're going to look at each one that way. So to give you a little bit of background, before the pandemic, it was most lenders could go down to 580 actually, right? That was kind of the what we call the government loans, so FHA and VA loans. They really didn't have a problem going below it. They're harder loans to do in general when you go below 620, in that FHA and VA is going to look for what we call compensating factors, right? So if you are on a lower score spectrum of things, they're like, okay, hey, we'll do the loan, but we're going to want to keep the payment a little bit lower so that's not absorbing so much of your income, just to make sure that you're comfortable, right? To try and avoid putting someone in a foreclosure or potential foreclosure situation in the future.
Absolutely.
Okay? And so for us to go, so I kind of regress a little bit. So when the pandemic hit, everybody was scared, right? We didn't know what was going to happen to the economy. And all of a sudden, actually for a little bit there, the score was 640, right? And then I think it was about mid last year, we realized, okay, hey, things have calmed down a little bit. It's not the complete end of the world. We're dealing with this pandemic, and but the markets seem to be okay. So then they said, let's go to 620. Well, it had been 620 for a very long time until just recently. Now that obviously the pandemic's coming to an end, the real estate market's doing amazing.
Yeah.
About the only problem any of us have right now is just a shortage of inventory. But for the most part, jobs are doing much better. Our economy seems to be kind of recovering. So we decided. So that's why that $600 FICO score came back. What's going to happen is, let's say if I have someone that comes to me and they're let's say right at 600. Okay, I'm going to be looking at the body of credit, and then of course make sure there's nothing. A lot of times, let's be honest. When you're at that point, you probably had something happen to you in the past. Right.
Sure.
Either that, or you're just establishing credit. You're brand new. You opened up your first credit card a couple months ago, right? If that's the case, that's perfect. You're well on your way. But if you had some stuff happen in the past, don't worry. That's not going to be held against you forever. We all make mistakes. We all have things, man. When I was out of college, I had so many things to work on. I just didn't realize it, right? So
Absolutely.
We're all human, and don't be afraid to reach out and get some help on, or at least some advice on where you need to go to get to maybe higher scores. But if you're out where you're at and you want to buy a house, we need to take a look at it. The restrictions really are more of, when I run it through, when I want to do an FHA loan, they're just going to make sure that you are not putting your payment high as we would on a normal, like let's say 640 or something like that, right? As far as what it is against your income. So let's keep math simple. Let's say you make $2,000 a month. On a normal above 640, you could maybe have a mortgage payment of $1,000 in that scenario, right? About 50% of your income.
Okay.
Just for rough numbers, right? Well, if you're at 600, they might say, well, we want you closer to maybe like 750, right? It's gonna keep you at a lower payment against your income to compensate for the fact that you are on the lower end of the FICO spectrum for what they consider. So that's really what they're going to be looking for. Other ways to really help yourself if you're in a lower score situation is to have more money than needed to buy the house. Let's say you're buying a $100,000 home. You need $3,500 for down payment, which that's 3.5% on an FHA loan. And then let's say another, $7,000, whatever, $6,500 for closing costs, right? So you need 10 grand for closing, just some rough, easy numbers.
Okay.
Well, let's say if you have 13,000 in savings instead of only 10, that's what we call reserves, that extra $3,000. FHA loves reserves. It shows that, hey, in case something happens to your income, you have a couple months ready to go just in case. That
Makes
way you
sense.
don't put yourself into, again, a potential foreclosure situation. So if you're on
Okay.
a lower score spectrum, just know that it's your buying power is gonna be a little lower. If you want to help yourself, get yourself some extra reserves on top of it, and you're gonna put yourself in a better position to maybe get approved for it.
Okay, awesome. I appreciate that. Thank you for sharing that.
Mhm.
Because that's super important. Let me go ahead and admit this other person. Yeah, I think that's going to be super important as far as identifying that credit score. So let me ask you another question leading into that particular one. Give us the basic way to calculate a mortgage. I mean, if you don't mind, yeah, just something, just a minimal way. Someone's like, you know what? I think I could get a mortgage. How would you calculate a mortgage
Yeah.
just off the top of your head?
Yeah, this probably the safest way, considering you're not exactly sure what kind of program you can get into. Safest probably way is to take 35% of your income,
Okay.
right? To start off with that, okay, and put in whatever the payment is, right? So if you want a really an easy way to figure out what your potential payment's going to be, you can Google like mortgage loan calculator or something like that, right? What will happen there is you're going to get a roughly principal and interest. And then the one thing most buyers, especially first-time home buyers, don't think about is the fact that your mortgage payment is always going to include property taxes and homeowners insurance. All right, those are things you have to think about. And it's hard to answer that because the problem is every house is differently. The price point will to kind of determine that as well. The taxes on a 200,000, 300,000. But what you want to do is, let's say you're buying a $200,000 house. Estimate about a $1,200 or $1,300 payment.
Okay.
If that is more than 35% of your income, then it might start becoming an issue. All right. Now that's
Okay.
not the case in everything, but that's like a safe bet just to give you a rough idea, right?
Yeah, just a rough synopsis, I
Yeah,
think is important for them. Okay.
exactly. Because there's obviously more involving here, like what your credit debts are, things like that. But if you're trying to find a rough start, then I would say 35% of your income is a pretty good start.
Okay, cool. So I appreciate that. So 35% of the income, you hear that directly from our partner, Chris Urban. Going into another topic that I have, and I think it's probably safe to go into because we just talked a little bit about the 600 credit score, the FHA, the mortgage calculation. What is an idea for a conventional loan? Because a lot of people here have the misconception too that conventional loans are like you got to put 20% down, which in my opinion and in my experience, we've had some do 5%, 10%. Is that an option for people still
Yeah, man,
nowadays?
I'm glad you brought that up because
Yeah.
that is a big misconception. I mean, and that's something that's been around for decades. But I try to think back when I first started conventional loans. I think even then might have already had 3%.
Okay.
It's kind of been in and out a little bit, but you can go all the way down to 3% down on a conventional loan, right? Not even
Right.
FHA does that. FHA is a minimal 3.5.
Mm-hmm.
In today's world, conventional, especially with the market and everything's going on, conventional loans have become the gold standard for this particular market, and so we strive to try to put everybody into conventional if they can. It's a great program in that it's a good loan, right? I mean, you're going to have some positives to it that an FHA loan won't have. But the idea is you generally that's not like a necessary rule, but for the most part, if you're below a 680 FICO score, you're generally leaning more towards an FHA loan at that point.
Okay.
And then if you're above 680, that's when conventional starts to make more sense. But don't think you need 20% down. It's not a requirement. There are actually two different options or two different ways to go 3% down on a conventional loan. So don't sell you. And then of course the next minimal with that is 5, right? So absolute minimal 3, and then a lot of people do 5. I find if I had a look at my past 5-6 months, I would say my average is 5 to 10% down is what people are actually doing. There's a few out there that have done 3%, but most people actually want to put a little more money down because it obviously helps their payment.
Absolutely. Okay, cool. Thank you for that. So talking about the conventional, I think that was a good misconception that we kind of cleared up. I guess the next question that I would have for you, Chris, just kind of skipping through some things. For people that usually utilize a conventional, probably are somebody that already has a home mortgage or established credit, right? Would that be safe to say too? If you're getting a conventional loan, most likely you may have purchased a home in the past.
Or
what
not necessarily.
Okay.
Established credit would definitely be a better scenario for someone trying to do a conventional loan, not an
Okay.
absolute requirement. Um, I would say there's a good healthy mix of loans that I've worked on over the years where it's a conventional loan and that they either bought their first home,
Okay.
or they're selling and buying another one.
Okay.
Of course, if you're trying to buy like a second home, vacation home, or investment home, it's always going to be a conventional loan.
Makes
But
sense.
yeah, I wouldn't say that. I would say a good healthy mix of my loan conventional loans have been people who've never purchased a home before.
Okay, cool. Thank you for that clarity. So going into my next question, what advice would you have for someone who, with the pandemic, because we brought it up, we talked about it, it's kind of outweighed some things, but it also benefited people in the aspect of being able to get a forbearance on their home, which that could be a benefit and it also could be a downside because some of the buyers that I've been talking to established a forbearance and now they're utilizing some of that money that maybe they're going to put on the back end of their mortgage. Their credit is going up, but they saved some money up that they want to look into an investment home or a second home.
Yeah.
But from my understanding, and again, this is why I have the expert here with us, what is the advice that you can give to those people who are looking to buy another home? Is there any limitations? Are there obstacles that they would face in that particular aspect?
Yep. Oh man. And that's a big hot topic now. Of course, it's kind of going away now that we're getting out of this. But if you went into forbearance, the simplest rule for pretty much every loan program is you must have been out of it for the past 3 months, right? So if you were in forbearance and let's say ended in January, you'd be fine. February, you'd be fine because you've now made 3 payments since then. So that's the first requirement is you've made at least 3 payments out of forbearance. Okay. Small little caveat to that, if you are doing a conventional loan and if you happen to be selling your house, that satisfies that for whatever reason. That's a conventional loan thing. So if you sell a house and then trying to buy, you're actually okay.
Okay.
There's a way around that, but for the most part, they're wanting to see that you've been out of it for 3 months. Okay. The next big thing is make sure you've established with whoever you're making your payments to. Establish what's going to happen with the money, the money that was meant to be made for those missed payments, right? Because every bank unfortunately handled differently. The federal government came out with that act, and they set that minimal requirement, like, hey, you must at least help people, and there's some of the options you can do. Well, in my opinion, it should have been just, hey, everybody, we're going to tack on the end of the loan, but that's not what happened for every bank. Every bank had their own set of rules. Some created an actual second lien, where there's an actual another lien against your property with that money. And the reason why they did that is that's just another way of making sure that money gets collected if you do sell or refinance your home. Okay.
Sure.
Some did just get tacked on right on the back end of your loan, and more than likely on your mortgage statement, you probably see something like an unpaid balance or something like that is what it's usually labeled. And then some of them are just saying, nope, as soon as you go to start making your payments again, you must not only make up all the payments you missed, plus make that payment for that month. That's the worst option. And I don't know what genius thought that was a good idea to do that, because obviously there was a reason why a lot of people had to go into forbearance. But establish something. Don't trust that if you called and went in forbearance that it's all said and done, and as soon as everything's gonna be nice and dandy, right? It's more than likely it's not going to be that way. You are best to call before the forbearance ends and make sure and establish whatever plan they have available to you, and get that in writing.
Awesome. Thank you, Chris. And then I know we're kind of narrowing it down here. So I have one other piece of information that I want to ask you about. So say, for example, I come to you, Chris, these people telling me, oh my God, my credit is great, Antonio, I'm ready to rock and roll. And then you pull the credit and obviously some of the stuff doesn't add up. What is the next step for those people? Do we as partners have a database for them to assist with credit repair, or are we sending them on their own? What would we be offering them in this particular instance if we just need a couple points to get them right where they needed to be? What is your next step as our partner?
Yeah, so I'm not a bank in that, because most banks will just say, yeah, credit's not good, you're not qualified, and they keep going their way. Our goal, is to, hey, okay, your credit wasn't quite where it should be. Here's what you need to do. We'll go over it. Now, everybody's credit's in a different state, right? Some are a little bit worse than others. Some are, obviously much better than others. Everybody because we've all had different things happen in our lives, right? A lot of times credit is dictated to life experiences. So if it's just a few items, I usually go over exactly what they should do, and then you email them, okay, hey, take care of this, take care of that, and I usually like to try to tell them which ones to focus on first, what I think is going to help them the quickest.
Benefit, yeah.
Because the reality of it is, even though I'm not a credit repair expert, I've been doing this 11 years. I've looked at thousands of credit reports. We have tools available to us from a credit company, the company that makes you pull credit for. So I usually run it through their tools just to make sure what I'm going to tell somebody is accurate.
Absolutely.
And what them to focus on. So now, if it's so bad, if it's like, hey, this because sometimes there's just so much going on that it could maybe warrant outside help. Because at the end of the day, if you just, let's say you're sitting on a bunch of collections and charge-offs from the past, right?
Yeah.
Or maybe even have some judgments placed against you. Sometimes having someone who can write letters on your behalf or chase these companies down might be helpful. Now, the hard part about, and more or less what we call it the credit repair companies, is just to make sure that whoever you hire is reputable. That's the hard part. And I've seen credit repair companies come and go throughout the years, right? Plenty of them. The hard part is what they'll first do is usually go and dispute every single account, from at least what I've been told, at least from what I've seen when I've pulled credit that's been through it. That's the first start in that, because they're disputing and just trying to get down to how it happened or whatever it is. Whatever it is they do, just make sure that they finish whatever accounts are targeting, finish and get those resolved, and then to make sure they undispute the account. Because the big problem in lending is, if I pull your credit and you're sitting on a bunch of disputed accounts, more than likely, I'm not going to do your loan right there and then, because a disputed account is really not part of your credit scores at that point.
Exactly.
So to make sure we're looking at accurate credit, they generally want those accounts undisputed. So that's why just make sure you're hiring a reputable, Google search and make sure they have good reviews, make sure they have good follow-up. Communication's key. It's huge.
Absolutely.
So, but most people, in all these years I've been doing this, most people are not that far where they necessarily need to go to that route. Most of the time, it's like, hey, focus on these 3 things. Call me in 6 months or call me in 8 months, whatever it is. I can give you a rough time frame. Most people are in that position.
Okay, cool. So I got 2 more questions for you, Chris, and then we'll get about our day. So the next question that I have for you is, okay, so we talked a little bit about the forbearance. We talked about the credit scores. What is your turnaround time? Let's say, for example, I come with someone, the buyer, and this is a question that I get: how long am I going to have to wait? Because I seen a house that I love today, and I'm like, well, let's get everything in order. Let's produce the documents. You give us a nice extensive list of things that are required at the beginning of the video. We'll make sure that it's able to be shared with everyone. But what is your turnaround time? Let's say, for example, you get a buyer who provides you all the necessities. How quickly do you get them a pre-approval?
Yeah. So I'll give you a quick story. I got a call. I got an email last Friday at 10 o'clock at night. Someone who said, "Hey, I need a."
It wasn't me, was it?
No.
Okay.
No, it was someone that was just, hey, I found a house. It's our dream home. I want to do. We really want to see if we can buy it.
Okay.
I emailed the individual back that same night and said, why don't we connect Saturday?
Yeah.
We connected Saturday. We went over some basic information, got credit pulled. They went and saw the home that same day. I pre-qualified them that same day, and then they were able to make an offer. So if you're willing, now I can't do that obviously all the time, at least that quick, on a Saturday anyways. But most of the time, if you call me on a Monday morning or Tuesday morning, and if you can get me everything, by lunchtime or something like that, I'm going to get you pre-approved or pre-qualified that same day.
Awesome.
Or if you need the evening, so if you send me stuff Monday night, for example, I got somebody's stuff Monday night, and this morning I've already pre-approved her. So
awesome.
It's quick. It's because it's really, the reality of it is it's just a matter of how fast you're willing to give me your documents, how fast you're willing to communicate with me. So.
No, I appreciate that. And that's timing of the essence. In this business, everything is like timing. So like, if you're serious about getting a pre-qualification or pre-approval to move forward, get the information in, because we're going to work as hard as you want to allow us to, in essence, because it all revolves around the buyer. So from a buyer perspective, get the information, and then Chris can probably get us something ASAP, especially timing of the essence in this market. you can't wait 2 or 3 days to put an offer in. If you find a property that you love and it hit the market, we got to be writing that offer that same day.
Exactly.
So I think that's a fair assessment, Chris.
How many homes are more than 24 hours anymore and without multiple offers, you know?
Yep. Or so, $20,000 over what the purchase price is, waiving appraisal contingency, all that craziness.
Yeah. Wow, and that goes back to when you were talking about, you know, hey, just be forward with me too. If you give me everything and you're up front, you tell me everything up front, it's going to be that much quicker and more streamlined, you know, just to get your pre-approval out there. Because finding out something later on can slow things down, can potentially ruin the whole transaction for you. So
I think you made a good point earlier too, Chris. You're talking about escrow, inspection, appraisal. Those are all out-of-pocket monies, and we didn't. I should have elaborated on that a little bit more, only because that is out-of-pocket money that you don't get back. So why would you? I mean, obviously it's for the good cause, you know, getting the inspection done, but you're not getting that money back if the deal falls through. The escrow money, we might be able to work something out, you know, depending on what the reason for the denial is. However, inspection and appraisal money, I can't afford to lose $800 just for no reason. I mean, if you have it, you have it. But
I tell people all the time, I was like, listen, I don't care if you're making $500,000 a year and you got 2 homes, all this, losing $800 is still losing $800.
Absolutely.
You know, that's a lot of money. I don't care how much money you make or what money you have saved up.
Yep. Chris, I appreciate you taking the time to sit with me for a few. One last question. Is there any advice that you can give to my potential buyers if they're even just considering buying a home? Would you suggest that this is a good time to buy? What is pinpoint what the interest rate is right now, the going interest rate, because I know that's kind of like a highlight point for some buyers, and then maybe some advice that you can give just to, you know, kind of bring it all together for us.
Yeah. Now, I was hoping you were asking that, because here's the thing. Right. So yes, the market as far as home prices are high again. Right. But guess what? Guess what's different now than it was back in 2007 when home prices were high? Interest rates are really low. You know, we're still talking, if you have you don't even have to be, let's say you're like a 680. You're still talking a 3.2% interest rate. Right. Rates are amazingly low. And there's a huge difference between a 3.2 and even a 4.2. Right. Now, even a 4.2 is still not that bad. It's really not that bad of a rate, but right now rates are still low. Well, guess what? If house prices do go down, because I hear all the time, I'm just waiting for the housing market to calm down or crash, whatever it is. Well, guess what's going to happen when home prices do go down? Rates are going to go up, right? Because there's going to have to be some kind of inflation control, right? So rates will have to go up, so your payment doesn't change, right? And I don't want to get too technical. But the amount of principal or let's just say this, the amount of interest that you pay over the life of the loan versus principal is much greater between a 3.2 and a 4.5% interest rate, right? Okay. So yes, you might get a home for cheaper, but you're going to get a 4.5% rate, and then you're going to pay more interest anyways.
Makes sense. Yeah.
It's just, so you gotta. I've always looked at it, and I had relocated and moved not too long ago. I didn't sit there and waited for the market to crash, right? The time of my life was there to buy a home. I did it. So, and I took advantage of these low rates as well. That's huge. So don't necessarily wait for that, because that's more than likely not going to pay off for you in the long run.
Makes sense. Wow, Chris, thank you, man. You kind of answered. Look, I have like a bunch of notes here. I don't know if people can see, but I took some notes too. I was like, this is going to be refreshing for me too, because you know you're in the industry and things change. The market changes. Some qualifications change. Requirements change. So it's
I have a question for you, real quick. Yeah. You know, I don't know. Do you look at rentals listings as well? Like, what would you say is an average 3.2 right now? Rent.
Ooh, rentals are high, man. Rentals are, and that's part of the price inflation. When there's a lack. I did a video about on my TikTok. Yeah, I got a TikTok. Yeah. I did a video about the real estate market. What happens is it's like musical chairs. There's not enough chairs for the amount of people playing the game. So what happens is rental prices increase because people are not qualified. But for a 3.2 right now, easily for it to be a modernized home, you're looking at about $1,695. Yeah. And that's, and again, it really depends on the location too. I know where we're predominantly at. Our property management team in Kissimmee, Poinciana, Haines City, Kissimmee, Orlando area is easily $1,695. A 4-bedroom that we have, that's a 2020 build, is about 1895. So yeah, prices are up, man.
So wanted to highlight this real fast and just some quick numbers. So if you're buying, a 200 and let's say a $240,000 house, right? And with where rates are today, just the principal and interest is $1,000. You throw a couple $100 on for taxes, insurance, you're still less than a $1,700 payment for a rental.
See that? So you're already saving yourself money.
So you're already saving yourself money, and then now you're gaining an asset. Now you're gaining, and that's still the greatest way to build, other than maybe retirement accounts, but that's still the greatest way to build wealth in America is own a home, making mortgage payments. Because the people who are putting 20+% down, and even this market, are people who are selling homes that they had bought even 4 or 5 years ago.
So they're utilizing that equity for another purchase.
Exactly. It's holding off and still renting is financially, that's my financial brain kicks on. Doesn't make sense.
Yeah. Yep.
So
wow. Well, Chris, you shared a lot of good information with me, man. I appreciate you. I'm going to leave it at that. If you guys are on the market for buying, selling, renting, investment property, please feel free to reach out to me. You can contact me 407-255-0729. Also visit thecoolestrealtor.com. And then I could get you connected with my partner, Chris, with Butler Mortgage. And we can go from there. I know we're excited for this year. Chris, you gave us like a ton of information. So I'm going to make this video likable, shareable, and able to make comments. We're going to put it on YouTube. We're going to put it on Facebook. So if you know someone that's on the market for buying a home, please refer them back to this, because we talked about the qualifications. We talked about some of the programs. We talked about the credit. Talked about a lot of things in a short amount of time. And I know we kind of cram-packed it all, but I think you did a great job, Chris, at explaining everything. So I appreciate that.
Yeah, if you're on, wherever media you're on, if you have a question, just tag me in the question, especially if it's on Facebook or something like that, and I'll see it and I'll get in and answer that question. I don't mind at all. Or if you want to be more personable and anyone see it, then you can reach out to me individually or tell Antonius about it, and then he'll connect us.
That sounds like a plan. Chris, I appreciate your time. I hope you have an amazing day. I hope everyone has a healthy, wealthy, glorious, boreas, torious, minorious, florious Wednesday. Right, Chris? I know we are. With that
absolutely.
Being said, everybody, most important thing, stay blessed. Signing off, guys. Have a great day.
Thanks,
Thank you, Chris.
Bye-bye.